This is Rod Kuzanin, Spooman for Risk on May 26, 2010. All times on the chart are Central Standard Time. Today's video will focus on trading with the trend. What we have before us is a SPM10.P contract, 5-tick, which is the large S&P contract as shown in TradeStation. Trading with the trend is perhaps one of the most biggest and important things that a trader can do during the course of the day, unless he really enjoys losing a lot of money. So knowing what the trend is, what the large trend is, and what the short-term trends are can make a big difference in whether or not you're going to end up having a profitable day. So looking at today's chart from the time of the open. Now you'll notice, of course, that there was a gap up. That notwithstanding, the fact remains that most traders would have anticipated some kind of a retracement during the course of today. But how much of a retracement we would see, that, of course, is anybody's guess. Now you can place a variety of different indicators on a chart, and at best all you're going to see is what the very short term is relative to the trend. And for some people, maybe that's all that they need. For example, we have a slow stochastic here along with the DPO. Those two indicators can at times be extremely useful in at least capturing a few points off of peaks and valleys. Now, we use these two very simple indicators, especially from the standpoint of determining divergence. However, that's not the subject of our discussion right now. The discussion is to focus on what is the trend. So how do you do that? In our course, we teach a variety of different ways of determining the trend. Now we're going to give you a hint on one particular type of method that is used for determining the trend, which is very simple. There are basically 4 major trends that the market will ever take during the course of the day. Only 4. Today what we have is what we would normally call a green day down. There are many different ways of characterizing these 4 patterns. We didn't originate the patterns. We've learned these from other trading sources. But characteristic of a green day, whether it's up or whether it's down, your best entry is after the first 30 minutes of the day. Your best exit will typically be prior to the last 30 minutes of the day. And depending upon more precisely when the best entry occurs, it will skew to some extent when the best exit occurs. Now today's best entry, the high of the day, was right in here, right around 9:30. That would mean that the low of the day should be coming somewhere around 2 o'clock. And where did the low occur? Well, the low occurred ultimately at the close. But you'll notice that right in here, right there, okay, about 2:30, which is a little late, is where the low occurred. So by knowing when the best entry is, it is possible to forecast where the best exit will be in terms of time. And that's a fact. We teach this in our course. Now, in between the best entry and the best exit, you can have all sorts of retracements and intermediate trends. But remember, in a green day pattern, your best entry is after the first 30 minutes, and therefore the best exit will be prior to the last 30 minutes, and depending upon more precisely when the best entry will occur, it will affect when the best exit will occur. But time and time again in this kind of a pattern, if your best entry is in the morning, your best exit will be in the afternoon, somewhere after 1 o'clock. Now, there are, of course, other ways in addition to this that we can aid ourselves to know what the pattern of the market is at any particular point in time. Now, since we already knew that the best exit of the day is going to be sometime in the afternoon, we put on an indicator to help us to see what direction the market was going. Now, I'm not going to reveal how we did this, but we're using these particular arrows, what could amount to trade signals, as a means to aid us in determining what direction the market was taking. So we turned this on at about 1:30. We're expecting the low of the day could come perhaps as early as 1:30 or thereafter. But now we put this indicator on and see what it helps us to do. We come in here, and first of all, we should mention, let me go back here, if the high of the day is in the morning, the low of the day is going to be in the afternoon. So this low that took place here at about 10:46, 10:47, 10:48, right in there, we know we're going to go lower than that, just based upon pattern alone. So right in here, we turn on the indicator right after we've just about exceeded that low to see how much lower we're going to go. And now the indicator says we're still short. Is this the end of is this particular move right here the end of the trend? Might be, but without an indicator, how are you going to know? How about this end? Is that the low of the day? Could be, but without an indicator, how are you going to know? Here, we have more indications that we're still short. We're into 1 o'clock. We're still short. We're still short. Okay? We're still short. Now we come in, it's about 2:30 right in here, and for all practical purposes, we shouldn't really be expecting the market to go much lower, not based upon pattern, but by way of a simple indicator, and this really is very simple. This indicator helped us to continue to remain short or to take additional short trades all the way into 2:30, just by having specialized indicators. And even as the market made retracements, we were still short. It wasn't until just before the close that we had any indication that the market might be turning, but then right before the close, we had further indication that the market was still short. Another indicator we use helps us to see whether short-term trends are beginning. This indicator here, which is beginning to go long right at the top of the move, simply tells us that we are way too early to anticipate a change in direction. This will frequently occur using this particular indicator. If it begins to go long close to the top of a move, then in all probability the market is still short and we should be looking to take a short trade, and this is almost an indication that we should get ready to take a short. It happens here, and a little bit later, it happens right up here. Again, short the market. But now watch what happens a little later on. Now, closer to the bottom of this move, this indicator takes off. And it now becomes, at least for the time being, a short-term move to the upside. The trend is your friend, so don't forget to trade with it.